Did you know that only 24% of millennials demonstrate basic financial literacy? Understanding and managing your finances is more important than ever. In this video, we'll share 7 effective strategies to enhance your financial intelligence and make smarter money decisions. Financial literacy is crucial for achieving personal and professional success. Let's dive into our first strategy, understanding financial basics. Mastering the financial basics is the foundation of financial intelligence. Let's explore some key concepts and how you can get started. 1. Budgeting. Creating and sticking to a budget is essential for managing your money effectively. A budget helps you track your income and expenses, ensuring you live within your means and save for future goals. Start by listing all your sources of income and categorizing your expenses. Use budgeting tools or apps like Mint or Enab, you need a budget, to help you stay on track. 2. Saving. Building a habit of saving is crucial for financial security. Aim to save at least 20% of your income each month. Establish an emergency fund with 3 to 6 months worth of living expenses to cover unexpected costs. Consider setting up automatic transfers to your savings account to make saving easier and more consistent. 3. Managing debt. Understanding and managing debt is a key aspect of financial literacy. Focus on paying off high-interest debt first, such as credit card balances. Use the snowball or avalanche method to systematically reduce your debt. Avoid taking on new debt unless absolutely necessary, and always strive to make timely payments to maintain a good credit score. 4. Understanding interest rates. Interest rates play a significant role in both saving and borrowing money. When saving, look for high-interest savings accounts or investment options that offer better returns. When borrowing, aim for loans with low interest rates to minimize the cost of borrowing. Understanding how interest works can help you make more informed financial decisions. 5. Financial tools and resources. Utilize various tools and resources to improve your financial literacy. There are numerous online courses, books, and websites dedicated to teaching financial basics. Websites like Investopedia and Khan Academy offer comprehensive guides on financial concepts. Additionally, consider attending workshops or seminars on personal finance. 6. Setting financial goals. Clearly defined financial goals provide direction and motivation. Set short-term, medium-term, and long-term goals to guide your financial decisions. Short-term goals might include saving for a vacation, while long-term goals could involve retirement planning or buying a home. Regularly review and adjust your goals to stay on track. 7. Monitoring your financial health. Regularly review your financial situation to ensure you're on track with your goals. Use financial tracking tools to monitor your income, expenses, savings, and investments. Adjust your budget and spending habits as needed to align with your financial objectives. By mastering these financial basics, you'll build a strong foundation for enhancing your financial intelligence. Next, we'll discuss the importance of investing wisely. Investing wisely is crucial for growing your wealth and achieving long-term financial goals. Let's explore some key principles and tips to help you get started. 1. Understand the importance of investing. Investing allows your money to grow over time, helping you achieve financial goals like retirement, buying a home, or funding education. Unlike saving, investing provides the potential for higher returns, which can significantly boost your wealth. 2. Different types of investments. There are various types of investments, each with its own risk and return profile. Common investment options include stocks, shares of ownership in a company. They offer high potential returns but come with higher risk. Bonds, loans made to corporations or governments. They provide regular interest payments and are generally considered safer than stocks. Real estate. Investing in property can generate rental income and capital appreciation. Mutual funds and ETFs. Pooled investment vehicles that allow you to invest in a diversified portfolio of assets. 3. Start early. The earlier you start investing, the more time your money has to grow. Thanks to the power of compounding, even small contributions can grow significantly over time. Aim to start investing as soon as possible, even if you can only contribute a small amount initially. 4. Diversify your portfolio. Diversification involves spreading your investments across different asset classes to reduce risk. By investing in a mix of stocks, bonds, real estate, and other assets, you can mitigate the impact of poor performance in any single investment. Diversification helps protect your portfolio and ensures more stable returns. 5. Understand your risk tolerance. Your risk tolerance is your ability and willingness to endure fluctuations in the value of your investments. Assess your risk tolerance based on your financial goals, time horizon, and comfort level with market volatility. Choose investments that align with your risk tolerance to avoid making impulsive decisions during market downturns. 6. Do your research. Before making any investment, thoroughly research and understand the asset you're investing in. Look into the company's financial health, market trends, and potential risks. Stay informed about economic news and market developments that could impact your investments. 7. Seek professional advice. If you're unsure about investing or need help creating an investment strategy, consider seeking advice from a financial advisor. A professional can provide personalized recommendations based on your financial situation and goals. They can also help you navigate complex investment options and strategies. By investing wisely, you can build wealth over time and achieve your financial objectives. Next, we'll discuss the importance of understanding financial statements and how to read them. Understanding financial statements is essential for making informed financial decisions. Let's explore the key financial statements and how to read them effectively. 1. The balance sheet. The balance sheet provides a snapshot of a company's financial position at a specific point in time. It consists of three main components. Assets, what the company owns, such as cash, inventory, and property. Liabilities, what the company owes, including loans, accounts payable, and mortgages. Equity, the residual interest in the assets of the company after deducting liabilities. It represents the owner's stake in the company. To read a balance sheet, ensure that the total assets equal the total liabilities plus equity. This confirms that the balance sheet is balanced. 2. The income statement, also known as the profit and loss statement. The income statement shows the company's financial performance over a specific period. It includes revenue, the total income generated from sales or services. Expenses, the cost incurred to generate revenue, including operating expenses, cost of goods sold, and taxes. Net income, the profit or loss after all expenses have been deducted from revenue. To analyze an income statement, focus on trends in revenue, expenses, and net income over time. Increasing revenue and net income are positive signs, while rising expenses may indicate potential issues. 3. The cash flow statement. The cash flow statement shows the movement of cash in and out of the business over a specific period. It is divided into three sections. Operating activities, cash generated or used in the core business operations. Investing activities, cash used for investing in assets like equipment or property. Financing activities, cash received from or paid to investors and creditors, such as issuing shares or repaying loans. To read a cash flow statement, examine the net cash flow in each section. Positive cash flow from operating activities is a good indicator of a company's ability to generate cash from its core business. 4. Key ratios. Financial ratios are useful tools for analyzing financial statements. Some important ratios include current ratio, measures liquidity by comparing current assets to current liabilities. Debt to equity ratio, assesses the company's financial leverage by comparing total liabilities to equity. Return on equity, ROE, indicates the profitability by measuring net income relative to shareholders' equity. By understanding and analyzing these financial statements and ratios, you can gain valuable insights into a company's financial health and make informed investment decisions. Next, we'll discuss how to enhance your financial knowledge through continuous learning. Continuous learning is vital for enhancing your financial intelligence. Let's explore ways to expand your financial knowledge and stay updated with the latest trends. 1. Read financial books. Books are an excellent resource for deepening your understanding of finance. Some highly recommended titles include Rich Dad Poor Dad by Robert Kiyosaki, The Intelligent Investor by Benjamin Graham, and Your Money or Your Life by Vicki Robin. These books cover a wide range of topics, from investing to personal finance management. 2. Take online courses. Numerous online platforms offer courses in personal finance, investing, and other financial topics. Websites like Coursera, Udemy, and Khan Academy provide courses taught by experts in the field. Enroll in courses that match your interests and learning goals to gain structured knowledge. 3. Follow financial news. Staying updated with financial news helps you understand market trends and economic developments. Subscribe to financial news websites like Bloomberg, CNBC, and The Wall Street Journal. Following reputable financial blogs and podcasts can also provide valuable insights and analysis. 4. Join financial communities. Engaging with financial communities, both online and offline, can enhance your learning experience. Join forums like Reddit's r/personal finance or financial discussion groups on Facebook. Attend local finance-related meetups and seminars to connect with like-minded individuals and learn from their experiences. 5. Use financial tools and apps. Leverage financial tools and apps to manage your finances and learn more about investing. Apps like Personal Capital, Robinhood, and Acorns offer user-friendly interfaces to help you track your investments, budget, and net worth. Many of these apps also provide educational resources and investment tips. 6. Attend workshops and seminars. Participate in workshops and seminars on finance-related topics. These events often feature industry experts who share practical advice and insights. Look for local events or webinars that focus on areas you want to improve, such as investing, retirement planning, or tax strategies. 7. Stay curious and ask questions. Cultivate a mindset of curiosity and always seek to learn more about finance. Don't hesitate to ask questions, whether in online forums, financial advisor meetings, or community events. Seeking answers to your questions will deepen your understanding and help you make more informed decisions. 8. Practice what you learn. Applying your knowledge in real-life situations is crucial for reinforcing what you've learned. Start by creating a budget, investing in a small portfolio, or analyzing a company's financial statements. Practical experience will help you understand the concepts better and build confidence in your financial decision-making skills. By continuously enhancing your financial knowledge, you can make informed decisions, stay ahead of financial trends, and achieve your financial goals. Finally, let's wrap up with a summary and some final thoughts. We've covered a range of strategies to help you enhance your financial intelligence. From understanding financial basics and investing wisely to reading financial statements and continuously learning, these tips can significantly improve your financial knowledge and decision-making skills. Recap of key points. Understanding financial basics: budgeting, saving, managing debt, understanding interest rates, using financial tools, setting financial goals, and monitoring financial health. Investing wisely: the importance of investing, different types of investments, starting early, diversifying your portfolio, understanding your risk tolerance, doing your research, and seeking professional advice. Reading financial statements: key financial statements, balance sheet, income statement, cash flow statement, and important financial ratios. Enhancing financial knowledge: reading financial books, taking online courses, following financial news, joining financial communities, using financial tools and apps, attending workshops and seminars, staying curious and asking questions, and practicing what you learn. By incorporating these strategies into your daily routine, you can make more informed financial decisions, achieve your financial goals, and ultimately enhance your financial intelligence. Remember, financial literacy is an ongoing journey, and there's always more to learn and explore. Stay proactive in seeking new financial knowledge, apply what you learn in real-life situations, and don't hesitate to seek advice from experts when needed. The more you understand about finance, the better equipped you'll be to navigate financial challenges and opportunities. If you found these tips helpful, please give this video a thumbs up and subscribe to our channel for more financial advice and tips. Share this video with friends and family who might benefit from these strategies. Together, we can all achieve greater financial literacy and success. Thank you for watching, and best of luck on your journey to enhancing your financial intelligence.